Picking up the pulse of the day. Now joining us is Olusola Ore-Oyeniku, Head Corporate Strategy and Relations, Keystone Bank. You're very much welcome to the pulse of the day.
Good afternoon. Thank you for having me on the program.
All right. So let us start with what is happening in the U.S. You're seeing that it's no news anymore that Trump is now the president, is now the president-elect of the United States of America. And he's known for a particular slogan. He actually ran with that mantra throughout his election campaign, make America great again and put America first. What does this America first look like for other countries and continents, especially frontier economies like that of Nigeria? Where does Nigeria stand in all of this?
Yeah, so America first is primarily buy America, goods produced in America, and then so that you can develop the resources in-house in order for the American economy to be at a better place compared to where it was, grow the GDP and all those. So that was the fulcrum of his reduced imports and also increased tariffs on goods. So as the 47th president, when he was elected, that marked a critical point for global economy with severe implications in respect to geopolitical, economics, partnership, and also in an environment where we're having increased multipolar economy. So for other nations, implication primarily is shifting primarily from what we had known during this current administration to something else, and that is in line with what he had done before now. That has to do with his foreign policy and trade relations.
Yeah.
We remember that during his first time out, he deprioritized other nations, increased tariffs, especially for Africa. That part of it was deprioritized. So also this will also tilt global power dynamics. Africa's strategic importance is very key to these political dynamics as we speak. Yes, we might likely see an intensified competition between the US and China, and probably Russia too, for their influence on Africa. Taking a cue from what he did in previous administration, we saw that there was a total lack of engagement with the African continent, and that was what allowed China to fill that void through various initiatives, the Belt and the Road Initiative, and other infrastructure amenities developments that we witness today. So this, I believe, would tilt the global power in terms of the strategic importance of Africa, and as such, we might be in for another road of development, given whoever that would tilt towards. Another thing that this signifies has to do with security and counter-terrorism efforts. During his administration, he showed sustained interest for counter-terrorism operations, a lot of engagement, giving the view that Africa is the breeding ground for extremism. That was his idea. So it may likely increase military and intelligence activities in Africa, especially the Sahel and the Horn of Africa. However, if there are no clear long-term strategy around this engagement, we might see that this might turn to a transnational engagement, thus leaving African countries to address these security concerns independently of whatever they have. So also we also tend to see climate changes, energy policies, loose monetary policy environment also, and then more important for us is the crude oil prices. All these are all the things that we might likely see. So it supports domestic energy production.
Can you hear me clearly? I would love to say this. That
yes, I can.
Trump is known for less interference in other states and is not always interested in getting involved in policies, in global policies as regards interference with other countries. And you have said that he's going to be very much involved, especially in the Sahel region. And looking at what is happening in the Middle East, you know, it's quite favorable for oil economies like that of Nigeria because of the price of oil. The brewing war between Israel and Iran was seen that is literally a positive outlook as regards the price of oil for frontier economies like that of ours. What do you have to say regarding that? Do you think this new administration is going to quell the entire chaos in the Middle East and literally be in our own best interest as regards oil?
So my sense is more in support of domestic energy production and export of U.S. oil. And that, I think, it would continue as we speak. There are about 12.6 million fields that is yet to be cultivated, or probably yet to be drilled. I believe it wants to. And like you know, the shale oil is about 12.8% of the global oil production. That's the global daily oil production. So if he should continue with that, his policy, around energy production, domestic energy production, I believe there will be rise in supply. Likely, you might not see that supply glut, but the increase in supply will tilt a lot of projections around oil prices, and that would also impact on countries like Nigeria, whereby our oil receipts, we solely depend on oil. So our oil receipts, we're likely to see a decline, except if there's a news tightening around our oil production for it to rev up and for us to be able to get a leverage on that. But I believe that it will do. Domestic oil energy production is going to go bullish on it, and that might lead to at least a glut in oil production, and then prices will taper down a bit. That will distort various projections.
All right, let's shift gears a little bit regarding interest rates and capital inflow into Nigeria. We're seeing that, looking at the antecedent, we're seeing historically Trump has favored a low interest rate environment, and the Federal Reserve raised interest rate, peaking it at 2.5% in 2018, before further cutting the rate to nearly zero in March of 2020. And we know the reason for that. It was because of the COVID-19 pandemic. Do we expect things to be any different considering the paths Federal Reserve are already on, knowing fully well that we've been seeing consistent rate cuts in the last one quarter?
Okay, so we honestly believe that no one should think he would do anything different from what he did during his first term, and that is primarily leveraging on the fact that during his campaign and in his manifesto, there are a lot of pronouncements on policies around interest rates that is not totally different from what he did during his prior administration. So if we are to deduce from those, and if he should follow through with what he had promised during his campaign era, we believe we'll continue to see this loose monetary policy. So if I were to go back by what he did, it is safe to say this loose monetary policy environment that is fulcrum at that point will continue, and then we expect that. You have rightly mentioned that as at Q1 2020, policy rate in the US was near zero from the 2.5 it was in 2018. And that is simply indicating its unwavering stand on low interest environment, massive support for economic growth, increasing domestic production and exports. Thus, America will have a stronger currency and be able to focus on other things. So we believe that the Federal Reserve might be pressured to adopt a more accommodative monetary policy stance, and like what he did during first time. However, we will wait to see what will happen, because that will also mean they need to balance between inflation rates impact, given that he's trying to up tariffs. So we need to see how that will pan out, how Federal Reserve will be co-opted into reducing some of these policy rates, and also how it's going to balance the act of increasing tariffs on goods. He has said about 60% for imports coming from China, and close to 10% from global. So we wait to see how that will pan out. We've seen twice this year Fed has cut rates, and we're also expecting that during the December meeting, rate will keep going down. So for economies like Nigeria, for us, how do we capitalize on these key factors so that we can further drive capital flows? Our hawkish monetary policy, like that has been consistent over this year. I believe that will keep driving investors that are looking for higher yields on assets, and then boost their confidence, which might increase our capital flow. Naira exchange rate stability also, if the Naira is relatively stable, like what we saw in 2018, I believe this will ensure proper planning for those investors and the impact to be positive on average investment returns, and that would, for inflation rate and management also, our policies around inflation rate pressures, how that erode values and all those, our policies around that would also give a level of comfort to investors and others for them to cover. And lastly, our key macroeconomic reforms, this will also enhance investors' outlook. And so if we are able to follow through with economic reforms that will really impact on the economy, I believe we'll gain from that, and then our capital flows will increase, reserves will also increase, and we'll be able to have a stable naira, as we speak, in the near to long term.
It looks like you're on the side of the CBN governor with a consistent increase in our interest rate, just to make sure our economy remains a hotbed for institutional investors and foreign investors. Thank you very much for joining us, Olusola Ore-Oyeniku, who is the head corporate strategy and relations, Keystone Bank. Thank you very much for joining us on Market Pulse.